I'm Rick Bensignor. Today is Tuesday, November 10th, and welcome to this week's In the Know Trader show. Well, as I broadcast late Tuesday morning Eastern Time, we've got the S&P down about 23 points, 2/3%. The Nasdaq's down almost 3 times that amount, with the Nasdaq comp down about 1.8%. The Russell is actually up today over 1%, so you are seeing small caps outperform. The Dow is up about 1/3%, and that's well off the initial highs. 10-year U.S. Treasuries trading at about 95 basis points, about 1 basis point lower on the day. Crude oil is up half a buck, and the dollar is generally flat, trading on either side of unchanged. Gold has gotten back about 1/3 of what it lost yesterday, up $28. And silver is up 75 cents, big update, 3%, but also it got trashed yesterday. So let's take a look at today's agenda. We're going to start off as we do. The trader education portion will be, this week I'm going to call it goal-based trading. We'll get into that shortly, and I'll tell you what that really is about. When we do our market overview, of course, we'll take a look at the week-over-week comparisons to sector movements within the S&P, but then we'll look at specific charts this week on the spiders, gold, the XLE, which is the ETF that is the S&P 500 Energy Index, and the US 10-year. And then, as promised, last week we didn't have time to get to the communication services sector, but we will do our best to get through these, 10 names or so, give or take, the 10 biggest names in the communication services macro sector ETF. Of course, the XLC is the ETF that covers all of these, and these are the biggest component names. All right, so let's talk about goal-based trading to start things off. And what do I mean by goal-based trading? Well, I think there's a couple different ways, maybe 2 or 3 different ways you can approach trading. One is first of all, I would say to you, what's your goal when you trade? Of course, it's to make money, but each time you get into a trade, do you think of it in terms of, oh, heck, I just want to make money. I do my analysis and I'm going to buy stock XYZ or short, ABC, and the goal is just to make money. And of course, all of us, we do this to make money. But are you in the trade, and while you're in the trade, is everything you do, let's make money, and you're going to try to ride this as long as you're making money, which means that it's possible that a trade could turn more into kind of an investment if it just keeps working for you. Let's say you bought something that keeps moving up. In theory, you could just trail a sell stop underneath, and the more it goes, the more you'll make money. And at some point, you'll either get stopped out, or you'll find a place to take profits and you'll leave. So that's one way. Second is, if you're truly a trader, I would suggest that besides the goal of making money, your goal is to reach the target in that underlying security that you've bought or sold that you set out for when you first got into it. So if you buy a stock at $20 and you do your analysis and you say, I think I could trade this stock and get to $26 a share, and that's the trade. I don't know if this is a long-term type of hold. You got in using shorter-term charts for the idea of a shorter-term type trade. It could be weeks or a few months, but it's not intended to be a long-term hold. Then I would suggest that your goal is to achieve the target that you set out for when you first got in, and take profits when you get there. Now, I have some people, every time I talk about this, I'll have some people tell me, well, let's say you buy a stock at 20, it gets to your target of 26. Why not play for 30? Maybe it'll get through whatever resistance is at 26. So you put a sell stop in at 24. And, it dilly-dallies around 26 for a while, and maybe it moves up and maybe it doesn't. So let's say it does, and now it gets to 28. So now maybe you put your sell stop in, you raise it from 24 to 26. You could do that But I would say again, that's you've kind of changed the intention from the time you got there. Unless your intention is simply I want to make money, and you think you're good enough not to get stopped out on one of these pullbacks. Because let's say you buy the stock at 20, it goes to 26, and instead of taking profits, you say, all right, well now I'm going to raise my sell stop to 24. Are you good enough in your analysis and understanding what that stock is going to do, what that sector is going to do, and what the whole market is going to do in order not to have it touch 24 and stop you out before it potentially goes well higher so that you could actually play for another new target to the upside? Because back and forth movement and just random noise in the market will often knock you out if you trade that way. So think about, are you good enough to do that with consistency, or would you be better off over time taking the profit of the $6 that you originally intended and maybe bought more at 24 on a pullback? So let's say you bought 100 shares at 20, you sell 100 shares at 26, and it pulls back to 24. Well, maybe now you buy 50 shares because something tells you that it's going to break above 26. So you may be able to play that way. So when I think about goal-based trading, of course, we all have the same goal, which is to make money. But I would suggest that it really pays to know and play off of targets that you've set for yourself. And it could be weeks before, it could be months before, but know where your exit is. Because a lot of times things, the market will give an opportunity to reach a certain level, and then it fades very quickly. And out of greed, you didn't take your profit because you thought it could go more. And to give you an example of something like that, I want to show you how important it is in the way I view trading. And again, I've been doing this over 40 years, and I don't just sit at home and trade. I'm a former commodities pit trader. I spent 12 years trading in the pits. I've been a strategist at several major Wall Street firms, including Morgan Stanley's chief market strategist for many years. Wells Fargo's head of trading strategy. So this is stuff that, I've honed and worked on for my entire career. So let's take a look at, let's do it this way. Here's the tag. This is my weekly tactical trader report. Notice the date, September 3rd. So a little over 2 months ago. And every week I kind of give a big picture view of what's going on. I start reviewing some of the markets. Even back then, we identified the likely bottom in the dollar because of not only the long-term trend line. This green trend line goes all the way back to the 2011 low, but it was also the first time in the entire sell-off that you had a setup 9 count, and those two combined gave me a decent likelihood that this was going to get a bounce from there. So, we suggested taking profit, if anybody who's short the dollar, taking profits and potentially even trading, playing for a trading bounce. But let's get to, look at gold, but let's get to the S&P weekly chart. Back then, we were making all-time highs, also a weekly 9 up, set up 9 count, first time in the whole move off of the March bottom. But I've also got some targets that have been in place from 2018 that were 35.55 and 35.95. If you think about what the ultimate target became, or the ultimate all-time high until yesterday, it was 35.88. So it came right in between there. So we were ready and waiting for that to take some profits. But I want you to see this too. This is now on September 3rd of this year. Anywhere up to 36.62 was a target. That's even beyond the levels I have. Where did I have 36.62? It's the monthly Elliott wave target using Tom DeMark's way of counting Elliott wave, which is a pure mathematical one. And unless you identify, and this goes all the way back to the 2009 low. So since wave 4's bottom got put in 2015, for the last 5 years, the target was 36.62 in the S&P. Now, The S&P didn't get to 3662 yesterday, but futures overnight got to 3668. Futures are trading about 4 points beneath, as fair value of futures, about 4 points beneath the value of the cash. So if they traded 3668, if the S&P was open, that means the S&P would have traded 3672. So we hit this target yesterday. And essentially, in the no trader clients knew for 2 months already that they since had put that level out on September 3rd. In every issue since, we've talked about 3662. If I want to turn this to, let's say, spiders, same thing. If you're trading spiders, this hit yesterday. That target, it's hidden just beneath there. It looks like it's 366 or so. Nails the high. All right, and then of course we sold off dramatically from there, over 100 S&P points, and right now we're down only 12 points. But the point is, you had a 100-point move off of an established target that is a long-term target that was first put on the charts in 2015. Back then, it seemed the S&P was trading near 2,000. It would be absurd to think of a 3662 long-term target at that point, and yet we've known this for years. And it doesn't mean it can't go through there, but you can see how the market so rejected that level. You had literally a few minutes to get it done unless you were trading overnight. You had to sell basically the open yesterday. And I did. I sold several things that lightened up because that was the best. That was the highest number I thought the S&P would trade for the balance of the year was 3662. So the fact that the cash fell short of that, but the spiders hit it, the futures hit it. That's what I talk about goal-based trading. I hit the goal, and we've been telling you this goal for several months now. And right away, you had a 100-point S&P move, which is 3% from that goal point, within the same day. Now, if you're a long-term investor, you might say, fine, it's 100 S&P points, it's not big. Eventually we'll take that out. Well, yeah, eventually we probably will. The question is when, and did it pay to sell some stuff yesterday early in the day? Even if you bought it back today, you pulled out a few percent from a trading perspective. I sold out some names that I've been holding for quite some time on that rally, waiting for something to have changed dramatically over the recent time frame. Obviously, the Pfizer news yesterday was that dramatic news, and in this case, it took the market to the upside. I've also told clients, by the way, where to have resting bids on a market sell-off. And some will say, well, I don't like to leave resting bids. Things can happen and change. Sure, they can. But then there's also the likelihood of, let's say the market falls apart from here, something very few people would expect at this point. But let's say if we take a look at, let's say I just cut this down to a weekly time frame. And we just look at this bar chart and we think of, isn't it very possible that despite yesterday's news, that the market's pretty much in a trading range for the last 4 or 5 months? Well, I'd say, yeah. Yesterday doesn't really change it. You're still in a trading range. So it doesn't mean that we couldn't still drift lower. Think about it. COVID cases are over 100,000 every day. There's still a lot of bad stuff. We're going into the worst part of COVID probably for the next 2 months. The numbers are already astronomical, and they're said to get likely far worse. The Pfizer news is good, but by the time the vaccine actually gets into yours and mine hands, or better said, your shoulder, we're going to get that inoculation at some point, that could easily be a year away. So I look at this as yesterday's move took a heck of a lot of shorts out. You have far less shorts in the market now than you've had in quite some time. and yet you're right back into the range. And there's nothing that says that this can't trade lower. So that's why it's really important, the way I look at things, to have goal-based trading and know where your targets are, especially your bigger targets. And when the market gives you that chance to play those levels, you do it. As hard as it may be at the time, it's generally the right thing. It doesn't mean it'll be the right thing that day, but generally, if you're looking at long-term targets, if you think about the December low from 2018, well, in March, we kind of very quickly blew through that low, and then in the same time came right back above. So if you were looking to buy against a significant low that had a major bounce from it to all-time highs, you know, yeah, you had a couple days of pain, and then you essentially bought when everybody else was afraid to, and you know, got the home run trade out of that. So that's what I wanted to talk to you about, having goal-based trading. Know where your goal is. Know where your big targets are that you want to play against, and when they get there, trade them and take your profits, because many times you don't. You see. Yesterday, you won't get an extraordinary move like yesterday where you fall 3% from the target on the same day you sell, hit it. But it's important to trade and play that way. And it's not just about making money. It's playing against the levels that you set out for. So that's this week's talk on that. Let's go back to here. We'll go to our market overview. So we're going to go spiders, gold, XLE, and so let's go back to, you're going to play games with me, are you? I know. Software update just changed this. There we go. Okay, let's take a look at, well, we looked at the SPY here. Let's look at the US 10-year on a daily chart. We sold bonds or got long the yield chart. This is the TNX chart, right? The 10-year index. This day here on October 7th, it met the rules for qualified breakout above 7.45 with a target of 93.8 basis points. We hit that the other day. Actually, we hit it yesterday, but honestly, we hit it several days before that, because in night trading, you know, TNX, you have to remember, TNX only marks pricing from 9:30 in the morning till 4 o'clock in the afternoon, the same time the stock market's open. But 10-year treasuries trade 23 hours a day. The futures do, and the futures hit 94 basis points overnight before they fell. So we had actually hit this already. We sell off down to 75 or so, pretty much the same TDST level that the breakout point was, and then comes storming back. So if you're a goal-based trader, and you were looking for yields to get into the mid-90s, you're there now. You're on a 12 count, meaning on it towards a 13. So as early as tomorrow, we could already hit our upside exhaustion signal. The counter signal to the downside exhaustion signal we saw in bonds in early August. So if I'm a goals-based trader, and I was looking to take out about 20 basis points in the US 10-year, I'm very close. You know, you're there at 9.56, 95.6 basis points in yield. You're there. Now, remember what I taught, I think it was last week, about testing. How do you know when you tested a high or a low? Well, we had a huge day that made the high in yield terms back in March. The low that day was 9.99 basis points. So we are very close to testing the day that made the high. So even though it's rather huge, I understand that, you've got a fair amount of reason that if you're a trader, and you're not trying to figure out the whole big picture on interest rates, but you're a trader, you realize that you're really in a trading range again. And I'll identify it by kind of this rectangle. Fair to say that we're really just in the top end of a trading range. So you don't know if your yields are going to go up or not from here. And we're getting some signals, so I'm taking profits. At least I'm going to take half to 3/4 of them, if not all. And then I'll decide what to do next on a trade if it breaks out above here. It's still going to test this range all the way up to the high of that March day. But that's anyway, that's the yield chart. Let's just quickly take a look at gold. Gold's been stuck in between its weekly conversion and baselines. It broke out to the upside last week thinking, and I thought too that could be a good thing for gold, but it's come right back down this week and it's still hanging out by its baseline. This is tough. I've lightened some of our gold exposure for in the no trader clients. We sold up into here. So we're actually flat gold. The only thing we have left on is we still have silver, but we bought silver so low that we still have a piece of it on. And we have some gold stocks, GDX, we have exposure in, but gold itself we're out of. And what else do we need? The dollar, just updating you here. Here's that 9 count we showed you back from the summer. We're still holding that long-term uptrend line. And as long as we do, the dollar's still okay, and you're not going to see a major rally in gold, and you're not going to see new highs in gold. But if the dollar breaks, then I think we get to 87 and the change in 2021, and that'll be good for the metals. But right here, it's very hard to determine because it's not breaking down. And okay, now let's take a look at XLE. Here's the daily chart, and today you're finally getting, well, I guess it was yesterday, you got a near-term breakout. If we pull this to, let's see, yeah, that is the daily. Here's the weekly chart. So you finally get some type of solid breakout to the upside after trying to base against the TDST line here at 29 and change. So that finally looks, energy has a chance for some type of double bottom. Hard to say if it's going to be meaningful or not. Obviously, the names are cheap and there's rotation going on now. So you will see some people coming into this, and obviously, you watch the price of oil, it's back to 40. I still have a hard time thinking why oil should get above 45. But, at least energy stocks have a temporary, I call this a double bottom, or a chance of a double bottom, at least. We certainly sold off enough over the last couple of weeks, to get down here and intersect the trading range of the week that made the lowest low. So this is a test of those lows. So that's that. Now, let's finally get to the communication services space. So let's go to the bunch of names that we have, and I'll try to get through them as much as I can. We're going to start with Verizon. And let me just put a few other things up here that I like to have on my charts. All right, so Verizon is getting close towards, let's see where that's, yeah, those are all-time highs. So we're very close to the highest I made from almost a year ago at 62.22. We're still within the range. You really need to, I don't know, let's see. This looks like it probably broke enough and then came right back. Yeah. To me, it's a hold. I'm not sure I'd go and buy it right now, but certainly if I have a name, there's no reason to get out of it. AT&T, ticker T, close to getting an upside cloud breakout. You can see there's a weekly TDST line right here at 55.33. It's trading just a couple of pennies above there. We're on a 7 count that hit a propulsion full exhaustion level. This may break out to the upside, but I'm not convinced you want to buy that breakout. You're quite overbought in MACD terms. I don't mind buying a pullback here if you get one down in the upper to mid 40s. T-Mobile. This is virtually on all-time highs, touched there last week, certainly much stronger than the other names. Let me put up sequential also. All right, so last week also got a sequential 13, meaning you have high risk to first buy this now. I probably want to see a pullback before I bought into this name. But generally, obviously, this is a much better chart in the preferred name within that kind of telecom space. If we look at some of the cable names, let's try Comcast. So also here, near or virtually on all-time highs, trading range. Really, if you look at the same type thing, it's it's gotten through the upper end, but you're really kind of in a trading range. Multiple times it broke out from at least this high here. You're making slightly higher highs, and then you pull back into the range. To me, you've got to get above 49 and stay above 49 to make me want to buy this here. But as a whole, it's certainly worth holding on to. Charter, close to all-time highs this week. Same type of thing. Consolidation recently, mid-range. Held the baseline from the cloud on the last sell-off down. I'd hold it, not adding to it here. Let's say in the entertainment space, let's go to Disney. Disney, weekly 13. So gap up, huge move yesterday early, cut right back off. This is a weekly chart. So you can see it still has not made new all-time highs. Has a 13 count. If you're going to be a buyer here, I like the fact that it at least held, turning bearish, held the bearish propulsion level. So maybe you play it, inside the gap, and you look to buy somewhere in the low 130s rather than, having chased it yesterday. Netflix. Double, even triple top over the last, several months. Still a very good looking chart. Take a look at, doesn't have to be a straight line, but, somewhere in this zone looks to be the transition point from where old highs were, and then you got lows. So, pull back down into here, into the cloud near 400, much better than chasing after it here at 482 or so. We've got a half a minute left. Let me see. Let's do Google. Google all-time highs this week, still within the context of an upside exhaustion signal. So to me, I don't want to buy this yet. Rather buy more towards the $1,600 level rather than chasing here. But obviously, great long-term chart and continues to make higher highs and higher lows recently. So just pull back. And the last one we will do is Facebook. And Facebook too, stalling, 13 exhaustion signal. Certainly worth holding on to. Look for support against 255 or wherever this baseline comes into on the future. You want to see it hold above 236. That's it for this week. I'm Rick Bensignor. Hope you enjoyed the show. This has been In the Know Trader.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.